Video one here and the Zoom video. Record to the cloud. All right, so I got 2 shots of not screwing this up. And again, I assume you all just might want to type yes if you can see my PowerPoint and hear me. I think we're okay, but just to make sure. Perfect. The chat box is the way to communicate with me. That's how I will be looking at that as we do the program. I will try and answer questions as we go. I will let the speakers know that I'm going to be somewhat rude and I will interrupt them during their presentations to answer questions as I feel appropriate. And, the 1 to 2 hour, I was sort of going to show you how I use the tools and trade the markets and really use it as sort of a cleanup session to answer questions. But thank you all for being here. I see Sagar, perfect Sagar. I will unmute you at the bottom of the hour and get you all set up. I see Keith is here and I think John's gonna join near the middle of Sagar's session. So again, welcome. It's always weird doing a program on a holiday. This is certainly an unusual year for all of us. Typically, my wife and I are on the road the entire summer, traveling to Europe, Asia, Australia, whatever, or much of the summer, and we're not traveling anywhere. So I figured it'd be a good day to do this. If you need to reach me afterwards for any reason, I actually have one request of users. Sometimes I get a hit on this one. My email is hgsidoc@gmail.com. I respond, and I don't mind sharing my mind, my information, and more about that later. As always, anytime I do anything personally or with others, it's for educational purposes only. Any recommendations are in the spirit of education and not investment advice. I am a doctor, not a broker. The next comment I'm not going to say, but it's true, and boy, did I lose money in the beginning. I am truly independent. I have a day job. I paid for everything that I use. In fact, I joke with Sagar every time I see his special deals. I think I've paid more for his stuff than anybody, only because I bought a 15-year license because I was so impressed with it, and it's worked out good for me. And nobody pays me anything to talk about their stuff. The people that I've invited here are friends. The speakers, I have a personal relationship with 2 of them, hopefully with Dr. K, who I've known less time. I'll develop one over time as well. I broke bread with them. I use their tools. I paid for their tools. And I like to have folks that follow me get exposed to the people that help me make a lot of money. And trading involves risk, and you alone are solely responsible for any decisions that you make. So for those that don't know me, a few words about who I am. I'm an individual investor. I am not a pro by any means. I'm a cancer doc turned businessman for my day job. I turned entrepreneur, although I hate that word, back in the late 90s when I quit practicing. Actually, I quit, saw my last patient around 2001. And I founded a series of healthcare startups, sold 2 to AmerisourceBergen, 1 to Cardinal Health. One that spun out of my first company was sold to Magellan. And so now we're in a new one. It's called Integra Connect. Not so new. I started it 5 years ago. I have 3,500 employees. I'm the chief medical officer, the founder, and on the leadership team. So if you think I can sit at my desk under non-COVID times and just trade, you're wrong. So trading for me is important, but it's not my day job. I've been trading for over 20 years. I trade predominantly stocks and options. I consider myself a swing to position trader. What do I mean by that? I find my charts using daily and weekly. I find my stocks using daily and weekly charts. If I am sitting at home, like during COVID, and I'm in between conference calls, I might look at an intraday chart. I spend very little time looking at intraday charts. I had a nice smile came to my face when I was reading something, I think on Twitter this weekend, when someone was talking about William O'Neill and how he did all of his trading off of weekly charts. If you are not a day trader, looking at intraday charts, I think, is dangerous. Now, you could certainly make the argument that for short-term swings, finding them on a daily chart, making sure the weekly chart is in your favor, and then finding the time to make the trade on a 60-minute chart. I have no problem with that, but I don't look at those charts. And why do I do this video? Why am I doing this today? Well, I've got over 20 years of posting videos on YouTube. I like to teach and help others. I've developed friendships with traders and educators, and I thought this would be a great opportunity today to have a chance to let the software developers and educators that I use show you their tools. And these are tools that I use every day and I use on my webinars. For those who don't know me, I really could care less about social media. I don't try to make a footprint. I don't have any income from anything I do on social media, but I do post a YouTube video every weekend. The best thing to do is just look up Jeffrey Scott, my name, and stocks, and then start a video and hit subscribe. And that way, every time I post a video, you'll get a notice. I also post on the HGSI blog. I'll talk about that in a few minutes. And on that blog, you have hundreds of videos by myself, Ron Brown, and others. Ron Brown, it's interesting, Ron and I were both students of Ian, and Ron had the luxury of becoming Ian's partner, something I've said before I'll always be jealous of. It wasn't the right time of my life, and he got to spend hours with Ian, days with Ian. Ron is prolific in posting. Ron talks more about from approach of volume spread analysis, which is different than me, but at the end of the day, it's about support, resistance, where the money is going, and then how you find the stocks varies. I will give a free offer to HGSI, a special offer to new users for HGSI. Everybody can get a free trial. Now, I know my email address is hgsidoc@gmail.com. I have absolutely no financial relationship with this company. I get paid nothing if you sign up. It does nothing for me except support someone who I like, which is George Roberts, the proprietor. In the lower right-hand corner was something I decided to play around with, and it's Discord. Discord is really a cool vehicle for social exchange. I started a site. Sagar, who will be speaking after me today, is the lead interactor on it. He's got great information. Paul Reiki posts stuff. A lot of good friends. Paul Duncan, a totally different style, have used it as for his. It's free. If you want to participate in the Discord site, you can see the link is in the lower left-hand corner. And because, well, if you have interest and you forgot the link, or you're unable to get it by stopping the video when you review it, just let me know. I'll be happy to share it. When I do my interactions, there was a time when I'd do some live meetings and try and only lose a penny on the meeting but not make any money. And those that came know what I'm talking about. I fed you. I warned everybody to go on a diet before the meetings because I really don't need to make money doing this. I make money from my trading and my day job. I used to call my education Be Your Own Guru. And I learned that from Ian. So the first thing I want to do is introduce you to this guy here in the upper left-hand corner. I owe so much to him, and many of the names on this list I know feel the same way. Ian Woodward, may he rest in peace, died several years ago. He was born on September 5th, so this is sort of like his birthday program. Ian was a follower of William O'Neill and a CanSlimmer at heart. He took CanSlim, and I think he made it better. And many of us were able to participate twice a year in the Ian meetings. And just such a gem. Every time he posted something on the HGSI board, I'd actually read it and I'd say it to myself in his English accent. He's such a wizard. Unfortunately, he never published anything, so unless you worked with him face to face, you never had the opportunity to learn. James, thank you so much for posting that Discord link. I was thinking how I was going to get it without coming out of PowerPoint show mode. So be your own guru to me is simple. I got here, and believe me, I make money trading. I'm up 150% this year. And yes, that's 150% on a portfolio that started at 1.4 million, which is just my trading account. That's better than normal, but I typically make money. My whole style is called Be Your Own Guru. I've read, I've been to live seminars, I've bought everything I can find, and then things work, things don't work, and I end up with my own version of what I do. Is it CanSlim? It's pretty close to CanSlim, but it may not be exactly CanSlim. So I started with O'Neill, like so many. If you haven't read this book, shame on you. It's time to read it. I read it every couple of years. I used to read it every year, but now I've got too many things to read. I'm friends with Gil Morales. Gil and Chris Kacher were money managers who worked for O'Neill, and they've developed some books, and you'll see incorporated in my trading are some of the things I learned from them about pocket pivots, Bible gap ups, etc. This is Ron Brown, who started in the audience and became the partner and went up to the front of the room. Lost a very good friend in the last year, George Lee. George, also a great trader, lived up in the Vancouver area, and we shared the podium so many times giving talks. It was funny, we'd give talks in hotel rooms. It was kind of funny. Pile the people in just to keep the cost down so the attendees could come to meetings and not go broke. John Person, who will speak later today, I believe I was one of the first people that bought his lifetime package in Trade Navigator. I bought it from his son who worked for him at the time, so I know it was a long time ago. And when I moved to Palm Beach, I figured out that his office was about, well, a mile if you measured it across the water, had to go around to the bridge, but a mile away from where I lived. And I showed up in his office, and we've become best buddies. We have shared meals. I had a desk in his office when I had more free time. Then I started my new company. John's a great guy. He's an educator and author. He's developed his own products, something I'll never do. I really respect him, and he's going to talk to us later today. Van Tharp, Position Size and Money Management, big books, but really the god of how many shares to buy, how to buy them, and how to manage them. Mark Minervini, very much in the O'Neill CanSlim school. His VCP to me is a variation of a cup and handle. I've been to his live sessions, although this year will be online. Some of you have purchased Roy Kelly's tools that I've been using, some cycle tools. But then the other two speakers, I'm really thrilled to have Sagar from Superior Profit. He'll be coming on at 10:35. We'll show you his tools. Sagar and I trade differently. I think I go for the long ball more than Sagar. But boy, does he have positive trades, and does his percentage of winning is super high. And he's got, I think, with no disrespect to John, Keith, or anybody else, probably the most comprehensive trading tool set that I've seen from an individual. And I don't know how he does it, but he keeps updating them. And I know he doesn't have a team of 30 working for him. Dr. K, I met him within the last year. I bought some of his tools. Those who've been around for a while know I'm a big fan of seasonality. And the fact that I could put seasonality in a radar screen or a market watch and understand 20, 40, 60-day performance without looking at a chart, where I could plot on my Thinkorswim or TradeStation seasonality and not have to go into one of the other programs, I thought that was a big positive. So that's what drove me to him. They will be speaking later today. I own a lot of programs. I need TradeStation, Thinkorswim. Within that, I have my own indicators I put together, many of which are copies from HGSI, proprietary indicators with permission. I have Dr. K's, I have John Persons, I got Cigars, and those tools together are how I make money. So I need both TradeStation, Thinkorswim. I'm going to introduce you to HGSI and then turn it over to Sagar in a few minutes. And I use EdgeRater, which I'll also probably talk about from 1 to 2, the Q and Dr. K tools, which you're going to see. And then I want you to make sure you pay attention to what's in yellow. I know that I got, and no harm intended, no negative feelings, I got beat up when I brought an add-on into HGSI, and it was more money than people thought they wanted to pay. I get that. I don't set the prices. And I'm never paid by any vendor when you buy something that I suggest or use. Often I'm offered a payment, and because that's how that business is. Educator 1 invites Educator 2, sends out an email to his list. Educator 2 speaks to Educator 1's list, and Educator 2 shares a piece of the pie with Educator 1. I don't want anybody's pie. So anything that's offered to me, I ask them to pass on to you as a discount. And I'm an unpaid volunteer. What I present is just education. For those that don't know HGSI, here's the website. Again, free 30-day trial, tons of videos, highly recommend it. And I'll have a special offer for new customers before we finish. So this is something Stan Weinstein, I think, pioneered this, or wrote about it, about the cyclical nature. And this cyclical nature is stocks, it's sectors, it's industry groups. It's in tick time frame, daily, weekly, hourly, monthly. And I like to always wonder, where is my investment that I'm looking to make on this continuum? And I want to be buying when the market's being marked up. I don't want to be buying when it's coming down. When we don't know where it's going, perhaps the way we are right now, I want to be careful. And so what I do, how I trade, my level of aggressiveness is so much dependent by what I see in the markets. And we'll go through some of that today. Here's the agenda. I've asked each of them to talk about what they want to talk about. I'm not going to tell these people who I've learned from what to speak about, but I think we're at an interesting part of the market, and if their tools can be used to show you some of their thoughts and how they're trading, that would be great. The websites are there. I'll send this out later. I'll have the websites in an email as well as some of the special offers. And then what my plan is at 1 o'clock is to really put it all together and show you how I make money using these tools together. I will, as I've said, answer the questions. And as I've already seen already, some of you answer the questions for me. So for HGSI, here's the special offer. It only applies to new subscribers or those who are expired. If those that already use it know how cheap this program is, it's a joke. $6.99 for what I think is the best product for swing traders and position traders in the world, and that includes data. So to entice folks, I have a coupon code, Jeff Scott Labor Day 2020, and that will get you 25% off the annual subscription. So $525, $40, $45 a month for a great tool. And you have to be either expired and coming back or a trial user. So I will include all this information with the follow-up videos as long as the videos come out. And again, this is not me. This is George, the proprietor of HGSI. Whoops, I didn't want to do that. Now, HGSI, the tool, is a big misnomer. And I remember Ian would sit in the rooms and he'd ask us, how many of you are fundamental traders? And a few people would raise their hand. How many of you are technical traders? Everybody else would raise their hand. After you went to 2 or 3 meetings, you knew to keep your hand down, because at the end of the day, we were both. A HGSI trader is a combination of fundamentals and technicals. Now, I'm not a fundamentalist like Sagar. I don't get to the point of wondering, looking at return on equity and on income and all those things. I care about earnings and revenue. I've worked in public companies. I really care about revenue. But you might wonder, why do I care more about revenue? Because we can play with earnings. What does that mean? It means that you work for a big company, you report your earnings, you know by the second month of the 3 months in the quarter how you're doing. And you let your team know, hey, we're really having a great quarter. If there's money you wanted to spend, if there was investment you were holding back, do it now. What that message is saying is, we don't want our earnings to be so great that the analysts expect the same blowout next time. If it's the second month in the quarter, it's not so good, you get a phone call from your boss saying, hey, freeze your hiring, cut down your investment, your outside consulting until the end of the quarter. The read between the lines are, We think it's going to be a tight quarter. We don't want to miss our earnings, so let's reduce our spend. So earnings matter. Blowout earnings is great. I'm not saying they don't. But let me tell you, when somebody starts missing revenue, they got a problem because you can't make up revenue. And if you do, you got a major accounting thing. Now, what I described on the earnings management, I've worked for a number of public companies. There's absolutely nothing illegal or wrong with what I said. Trust me, it occurs. Now, this is a slide that Ian had that I used to laugh, ha, 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 when I would see it. But boy, is it true. And this slide really points out what we're going through right now. When you were a kid in the States, you played chutes and ladders. Apparently in England, they could be a little bit more rough with the kids, and it was snakes and ladders. And Ian would talk about how he'd play with his sister. They'd roll the dice. And the goal was to make it from 1 to 100. First to 100 wins. And boy, oh boy, if you hit number 28, the ladder took you right up to 84. But if you hit number 87, you came right back down to 24. So the snakes brought you back down. And the point of this slide is, so this is just like your retirement. It's like your portfolio. Don't play snakes and ladders with your retirement money. Preservation of capital is goal. I took a hit on Thursday and Friday. I'm sure I'm not the only one. Growth stocks got hammered Thursday and Friday. I'm still up, like I said, a lot on the year. But I learned a long time ago, when I sense the market's going against me, I get lighter and I buy protection. And I can't even imagine what my return would be this year if it wasn't for all the money I lost on protection. But it's nice to sleep at night. Market context matters. I'm a top-down investor. I think I'm not the only one on this call. Sager, when he starts his wonderful YouTube videos, starts looking at worldwide markets. The markets matter. Markets drive 50% or more of the stock movement. Last night, the futures on the NASDAQ were down quite a bit. Yeah, I know it's a holiday, but the market's open for futures until noon and it starts again at 5. If the market rebounds tomorrow, say it trades down a little bit in the morning and by 2 o'clock in the afternoon, the NASDAQ's up 300 points. Do you think your stocks are up? Absolutely. But what if it's down 300? Your stocks are down. The market's going to determine how you do tomorrow. Now, the next thing that matters is the industry group. And then lastly, it's your stock picking. Now, what do we spend all of our time with? Stock picking. Not me. If you watch my webinars, half the time I'm looking at the market. So markets matter. So I look at the markets to determine my overall stance. Is it long, short, margin, cash? And then I look in a strong market that says to be long. I look for my favorite setups and I look for in the best industry. Now, I have the I can't help it's, the FOMOs. And from time to time, I'm going to do bottoms up where I look at the market as a whole and just look for setups. I can tell you I make my best returns when it's a strong market, I'm buying in the right industries, and I am margined up to the hoot. But that's got to be a strong market. And I use different tools to gauge what's happening. When you see a white slide, I've got a couple of Ian's pearls I'm going to show you over the next couple of slides before this section ends and I turn it over to Sagar. It will take a couple of seconds for that to happen. This is something that Ian used to do in the Palos Verdes Estates Library in sunny Southern California. What a beautiful place, up in the cliffs overlooking the ocean, no humidity. And you'd have a room of 20, 25 really smart investors. I bet one or two of them are on this phone call or this webinar. And every month they'd pick the top 10, 15 stocks in the market. Then you'd have someone who actually took down their notes and then they looked at it 18 to 24 months later to get an idea of how they did. You can take the markets and they would classify them as strong, mixed, weak, and weak market. They had to do that after the fact. You don't know what the market is, you can guess. And then they looked at 20 and 40-day performance. We are at best in a mixed, weak market right now. What they found in strong markets, smart people, great stock pickers could be 100% up in 20 trading days or 1 month, or 78% up in 40 trading days. But in bad markets, the same really strong stock pickers sucked. All right. What makes you think in bad markets you can do any better? The other interesting thing here is in a really bad market, it doesn't get better by holding on and waiting. Now, I don't know if we're in a mixed week or a mixed strong here. Are we moving to a very weak market? But some of the stocks like Shopify and others that broke through support look different than a stock like Amazon that stopped at support. And I don't know if the buy the dip mentality is going to work right now. This is an important slide. Now, a couple other best of Ian's. How far is this market going to correct? Well, the purpose of this slide, and it's dated, I've got to update it for the last crash, but there's only been a handful of big corrections since '09. 77% of corrections in the S&P 500 over 56 years were 8% or less. We're at about 4 or 5% at the most right now. As long as it remains less than 8%, you're fine. Another 11% were 8 to 12. So there's an 88% likelihood that we're not in a February 20th situation again, a 2008 situation again, that we are in a modest correction and the market will bounce. But there's always a chance that it's not. So if you want to be ignoring it, maintaining your portfolio, I think that's fine. But when we get below 8 and certainly below 12%, you have to be careful. If you look at the NASDAQ, 70% of the corrections were 8% or less. But once you got below 8%, you have no idea. There's absolutely no rules, rhymes, or reason. So 8% is a very, very important line in the sand. Now me, I'm a simple guy. I work full time. As I said, remember 3,500 employees? Imagine the issues I have to deal with. Fortunately, I've got great managers and I'm not the lead guy in this company. I look for stocks in uptrends and look to buy them on pullbacks. All right, that's my style of trading. Yeah, there's a zillion indicators there, but give me an hour and I'll make it so you want to use the same indicators and I'll get you thinking like me, green and blue are good, red are bad. I'm not going to teach you that right now because I don't have 3 days. But if you purchase HGSI, you need to email me and ask me and I will share with you some of the definitions of how I use these indicators. One of the things that Ian liked to talk about is free parking. In an uptrend, pull back to that 50-day moving average are often great places to prospect. If this market is not rolling over, then a lot of those big cap techs have pulled back to the 50-day moving average. You will hear me talk about a lot of tools that I use. I don't use indicators to tell me buy or sell. That's not how I trade. I use indicators to scan and have my eyes on the chart, quickly identify charts that might be interesting. I look for indicators that may help me find pullbacks to support in an uptrend. Changes in direction, momentum. You're going to see today, hopefully from John, his HCDs. If not, I'll talk about them because to me, it's one of the best signals out there, best candlestick signal. You're going to see Q tools, a breakout, bounce, box, go with flow, Dr. K's RSI, so many different things that I use. So it's that time. So my parting comments: 1, be your own guru. Investing is a business. Make sure you have the right employees. To me, those employees are your tools, software, continuing education matters, and trade the market we have, not the one you think we should have. I have the easy button here because it really isn't that hard. And on that note, I'm going to stop the video. Give me about 3 minutes and we'll start back up again with cigar. Thank you.